Following OPEC Plus ministerial discussions, the group decided to raise the oil output by 411,000 barrels per day in May, adding that this comprises an increment originally planned for May plus 2 monthly increments. The output increase, as well as a general risk-off mood, has led to a sharp over 6% decline in prices, with Brent Standard back to under $70 a barrel. Hello, this is Global Business Insights, where we look deeper at the main business stories moving markets all over the world. Let's start with some headlines. In what Beijing has called a biased downgrade, rating agency Fitch has downgraded China's sovereign debt over concerns about weaker public finances and the impact of higher tariffs on exports. Fitch yesterday cut China's long-term foreign currency rating from A+ to A. Fitch said its move reflected expectations that China would sharply increase spending in order to support economic growth and counter deflationary pressures amid rising tariffs, which would weigh on external demand, thus leading to higher fiscal deficits. Klaus Schwab, the founder of the World Economic Forum, is stepping down as chair of its board of trustees weeks after the organization promised an overhaul, that is after an investigation into workplace discrimination. In a letter to trustee board members, Schwab said the forum, which hosts the Elite Business Conference in Davos, must recover its sense of mission after a period of turmoil. The Director General of the World Trade Organization said new tariffs announced by the U.S., along with those introduced at the start of the year, could lead to a contraction of around 1% in global merchandise trade volumes in 2025. Madam Okonjo-Iweala warned of trade diversion effects, adding that the WTO had received many questions on the implications of the new tariffs announced. Still on tariffs, Canada has announced 25% retaliatory tariffs on American car imports, mirroring American measures for foreign-produced cars, which, however, exempt cars that comply with the North American Trade Pact. Capital One Financial Corp got approval from the Justice Department for its proposed acquisition of Discover Financial Services, after the DOJ told other regulators looking into the merger that it doesn't see sufficient competition concerns to block the deal. The $35 billion deal creates the largest U.S. credit card issuer by balances and sixth largest bank by assets, also giving Capital One control of Discover's card payment network. That's the fourth major payment network operator in the country. The Institute for Supply Management, ISM, yesterday said that its U.S. non-manufacturing purchasing managers index dropped to 50.8 in March, also the lowest reading since June 2024. The reading was from 53.5 in February. Output increased due to businesses rushing to complete pending work before tariffs come into effect. A gauge of backlog orders plunged to 47.4 from 51.7 in February. Also, U.S. citizens filing new applications for unemployment insurance ticked lower to 219,000 for the week ending March 29, as reported by the U.S. Department of Labor. This print was lower than the previous week's revised tally of 225,000. Later today, the release of the U.S. non-farm payrolls will be a much-watched event, also with the unemployment rate. Also, we are getting speeches by Fed Chair Powell and senior Fed officials Christopher Waller and Michael Barr, which will be scrutinized for clues on how the trajectory of inflation and other indices of economic health in the U.S. are being affected by latest tariff announcements. According to a statement on the bank's website, the World Bank has approved 3 financing operations totaling $1.08 billion to support education, nutrition, and economic resilience in Nigeria. The concessional loans aim to improve the quality of education, build household and community resilience, and enhance nutrition for underserved groups. Our first deep dive is on Africa. The United States is investing billions of dollars in mineral-rich Congo as it hopes to end raging conflicts in the area. U.S. Senior Advisor Masad Boulos said after meeting Congo President Felix Tshisekedi in Kinshasa that a pact involving vast reserves of cobalt, lithium, and uranium, among other minerals critical for mobile phones and electric cars, is being worked out. Analysts also say the renewal of the flagship Africa initiative known as the African Growth and Opportunity Act is extremely unlikely. The US administration is likely to prefer more focused country-by-country deals within the continent. The focus also is in places where a win-win deal can be struck. For example, as we see with the funding of the Lobito Rail Corridor to help transport critical minerals from the Central African Copper Belt to markets. The South African presidency also yesterday noted that new US tariffs underscore a great need to negotiate a different bilateral trade deal with Washington to ensure long-term trade certainty. Still on Africa, many analysts are concerned that its wealth of resources is still not being harnessed to the advantage of citizens who remain vastly impoverished. How do we explain the fact that the mining sector has dominated the Congolese economy since 1910 and the Katanga Copper Belt's cobalt reserves put at 5 million tons and Congo is still a country which is considered to have citizens that are amongst the poorest in the world? DRC have the largest diamond and gold deposits in the world, as well as possessing the second richest copper region with 70 million tons, only coming after Chile. And the same DRC is at best a developing state ranked among the 5 poorest nations. According to Professor Bola A. Akintarinwa of the Nigerian Institute of International Affairs, Africa needs an overdue reawakening to end wastefulness, corruption, and lay the foundations for fairness and justice in political governance. No one is coming to save Africa but Africans. Meanwhile, the world needs cheap access to vastly untapped raw mineral resources at the same time when Africa needs to tool its population and go up the value chain, raising the incomes and quality of life of its citizens. There is a different new world order emerging. Africa and large economies like Nigeria need more proactive positioning to find and exploit advantages to advance and defend their own interests. Latest developments in the DRC and renewed interest in its metals and resources should be of concern, as it seems to be progressing the familiar exploitative narratives that we've seen before, with the average Congolese having little to show for all these transactions. Although oil and oil products got a tariff exemption, the dual effect of higher tariffs hurting broad risk sentiment and OPEC Plus agreeing to more oil in the supply dynamic pushed prices significantly lower, over 6% drop for the Brent standard. Let's look at the decision of OPEC Plus to raise output. According to the OPEC statement, continuing healthy market fundamentals and the positive market outlook and an early agreement made on 5th of December 2024 led to reaffirming at the 3rd March 2025 meeting to start a gradual and flexible return of the 2.2 million barrels per day voluntary adjustment starting from 1st of April 2025. Saudi Arabia, Russia, Iraq, UAE, Kuwait, Kazakhstan, Algeria, and Oman met yesterday virtually to again review global market conditions, and they decided to raise collective output by 411,000 barrels per day beginning in May. The 8 OPEC Plus countries will continue to hold monthly meetings to review market conditions, conformity, and compensation, the next meeting being on the 5th of May to decide on June production levels. Many had thought we would see a more modest increase of just under 140,000 barrels per day next month. Also, the May hike, equivalent to 3 monthly increments, may still be paused or reversed, subject to evolving market conditions. Without referencing individual countries, OPEC said in its Thursday statement that the May output hike also provides the opportunity for participating countries to accelerate their compensation by way of additional production cuts in line with previous overproduction. The Energy Information Administration's weekly inventory data, that's in the US, was fairly bearish, showing US crude oil inventories up by 6.17 million barrels over the last week. The large build was driven by a 728,000 barrels per day week-on-week drop in crude exports. OPEC Plus has a different normal to deal with amid anti-fossil fuel activism and a tepid global economy buffeted by new strains of protectionism. They now have a more aggressive producer, the US, with a deliberate strategy to crash prices by flooding the market with crude, also leveraging on a better relationship with Saudi Arabia to keep OPEC Plus in check. It's not hard to see that OPEC Plus has been weakened in its market influence as it becomes obvious that pressing fiscal challenges are driving decisions more than market fundamentals. More on the impact of US tariff adjustments just announced. The US stock market saw its worst day since 2020 after unveiling plans for steep tariffs seen as upending the global economy. All 3 indexes finished with their largest daily decline since 2020, resulting in losses of over $3.1 trillion in market capitalization. The yield on the 2-year Treasury note dropped to 3.72%, and the 10-year yield also fell to 4.05%. Gold, bonds, and consumer staples were among the few safe havens for investors, with more recession-proof sectors like healthcare, telecoms, and utilities holding up better. The sharp drop in equities is a sign of low confidence in the economy and perception of higher risk of recession and the uncertainty. A declining yield in 10-year treasuries signal demand for safer assets, but lower yields can also imply cheaper borrowing costs for businesses and consumers, also may indicate that inflation expectations are moderating. The US administration have described the tariff announcement as emergency surgery and putting up a bold face, asking analysts to focus on longer-term economic health improvements as more jobs are created and adjustments are made to improve well-being of citizens and not stock markets. All this as hopefully domestic production ramps up and investment revs up. The Federal Reserve Governor Lisa Cook said yesterday at a speech at the University of Pittsburgh that the central bank can take its time to assess a highly unsettled environment before moving interest rates again, amid risks that inflation could worsen due to tariffs. And the head of the International Monetary Fund, Georgieva Kristalina, said that the IMF continues to study the implications of the new tariffs, adding that they pose a significant risk to the global economy at a time when growth has been sluggish. Asia-Pacific markets continue to extend declines, tracking steep losses on Wall Street as China responds to tariffs with stimulus support and strengthening its ties with trading allies. Well, that's all this episode of Global Business Insights. Thanks for watching. This is Bode Oshosami. Bye-bye.